Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Interesting times we're in, that's for sure.
Mike, the markets, again, we've had a record high quarter for when it comes to advances in the market. Is that kind of March madness going to continue?
Well, that's, of course, been the headlines the past couple of days as we close the quarter out. However, the reason why there's a record quarter like that is because the stock market had a big drop from October to December. It was the worst December, in fact, in the entire history of the S&P 500. It fell 20%. So, that big drop, and there was some panic at the end, the day before Christmas. It helps to lead to a big rebound, which is what we're having. But we've yet to go back up to the high that was set at the end of September. We're still a couple percentage points off of it. And, I'm looking at the market 1 week at a time, and we did make a new high for the rally yesterday. But I'm on guard for signs that this thing is going to falter out. I can't say I see them at the moment. However, the Russell 2000 is starting to lag, the S&P 500, so is the New York Stock Exchange Composite. So that's a little bit reason to be cautious. That doesn't mean, even if that's going to continue, that we're about to see the stock market begin the type of drop that occurred last fall. Because it's going to take some time for this to really top out and roll over. So I think the thing to do is just be kind of patient with the stock market averages, not get too excited about the rally that's taking place, and really be more selective and look for the few sectors and stocks that are making new highs, or at least on a 52-week basis, and have been outperforming the market, not just on the rally, but we're doing so when the market dropped, because I think that's the place where the gains are going to be sustainable, even if the stock market were to drop in the fall or at some point this year.
In other words, the theory being, if you can do relatively well in bad times, in ordinary times, you should do great.
Yeah, I think so. And the sectors that are doing the best, or have been from October till the present, are defensive sectors, sectors that tend to pay high dividends, such as REITs, utility stocks, and sectors that are sensitive to changes in the currency market, or when the Fed ends up lowering interest rates. And the interesting thing is, a month ago, the odds of the Fed lowering rates by the end of the year were approximately 25%. As we're speaking, those odds have increased to 70%. And the sector I think is most poised to benefit from that is gold, silver, and the mining stocks. And that's what happened in 2007 when the Fed started to lower interest rates that fall. Gold really took off, outperformed the stock market for 12 months. The mining stocks did too. But also in the year 2000, when the NASDAQ had a top that spring, there was a rotation into stocks such as Philip Morris, utility stocks, and eventually the mining stocks by the end of the year. And all three of those sectors led the way for the next decade. And I think that's really the similar type of cycle trend that we're starting to see begin this year. We did see gold, of course, rally up to the 1350 area from October to February, which is when it peaked out at 1350, and now is pulled back down to 1280, which is its support level. The gold stocks, interestingly enough, on this pullback really haven't dropped that much. And the junior mining stocks last week, when gold fell 20 points in a day, the ones I monitor didn't even drop at all. So if we look at gold, we got support at 1280, more support at 1250. That's really long-term support now. It's where the 200-day moving average is. Also, approximately the 50% retracement level of the low of last year and this 1350 high. So I think that's solid support, and really tells us we have a limited downside risk. So with that in mind, I think now's the time to be accumulating mining stocks, and really even junior mining stocks, which kind of lagged last year, but now are firming up. And I think that's going to be the exciting place to be this year, much as marijuana stocks have been the story for the past couple of years. I think before the end of the year, the story is going to become the gold mining stocks.
On the marijuana front, was the money made already, and now you just have to sit and wait and see who churns their way out to be a regular productive company?
Well, that's an interesting question. I'm not exactly sure yet, but I think the answer is going to be given to us this month, meaning that we saw these marijuana stocks have a big rebound with the stock market in January, February, but they fell with the stock market too last fall. And now they're consolidating and trading sideways. For example, Canopy Growth, which is really the large cap leader in the space, it's got resistance around $50, CGC, the New York Stock Exchange listing, and support at 40. That's a 10-point range, but if we break that range to the upside, which should happen by the end of this month, then I would expect that'll be a signal that we're going to see the entire sector really take off and rally. However, if it breaks down, then that would be a troubling sign that, the rally isn't going to happen. So I'm really waiting to see. However, there are small cap stocks in the space, which aren't as widely known, which have really been going up and up and up. So I don't really think, the sentiment, is that bad for them, and probably the odds are we will see another run in these stocks. And when I think about the stock market too, even though I'm more bearish than most people are on the stock market, I don't think we'll see a significant pullback begin, at least for a couple months. So that also provides enough of a positive tone in the financial markets for people to play their marijuana stocks again. And really, that is the space in the market where the hot money, so to speak, is going. For example, I have an account with Robinhood, and they list the top 100 most owned stocks, and these are it's mostly small speculators who have accounts with them. And the number one stock last year was Apple, and now it's been displaced with Aurora Cannabis, and there are many cannabis stocks in that top 100 list when it used to be all technology stocks. So that tells me that that's the space that the individual trader is going to this year for speculation, and I think they can get one more run, but we'll know that by the end of this month, I believe.
Are people waiting for a ruling to see if U.S. federally regulated banks will be allowed to finance marijuana companies?
Well, the reality is, I think these people trading these stocks aren't that sophisticated to be waiting for news like that, and are just going on pure price action. So if these stocks break out, they're just going to try to chase that action, and whether these banks start lending money to marijuana companies or not, I don't know. And it may not even matter, because the smaller ones are starting to do fine just getting financing from the stock market, just like the junior mining stocks do, doing secondary placements and so forth. And then when it comes to big companies, some of them are even starting to do deals with companies like Philip Morris. So I think the financing in the space is okay. To me, it's just a question of how long can speculation in that space continue with the stock market. And I think it's kind of dependent on how long can the stock market hold up without having another drop begin like it did last year. Because the marijuana stocks last year, they were doing great. They were rallying up until October, and then they dumped with the stock market. So I think the action in them might be dependent on the action in the S&P 500 more than anything else.
We'll have more with Mike Swanson right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, do you expect any soon or recent or quick news on the China-U.S. trade talks?
Well, that's an interesting story too, and I follow. I think the two publications to follow to find that out is the Wall Street Journal, and then there's a Chinese publication called the South China Morning Post, and both these publications get leaks from government officials. The Journal is only American ones, but the other one gets leaks from Americans too. And you can get a feel for how things are going by reading these things. And last week, our Treasury Secretary and a team went to China. They came back with some positive talk. However, Larry Kudlow told the media that Trump is willing to wait for months and months and months before a deal is made. And the sticking point between the two sides is China is saying that they will buy more American goods in return for tariffs being lifted. However, the Americans want the Chinese to not steal our technology over here and agree to not use their government as much to support their industry, and a whole list of demands that it's very unlikely the Chinese are going to make. And then they say they don't want to lift all the tariffs. And anyway, to make a long story short, the two sides have not come to an agreement. The Chinese delegation is going to go back to the United States next week. And the best resolution would be if the Chinese premier agrees to come to the United States within the end of this month or in May, and has a signing ceremony with Trump. To make a long story short, the meeting next week is critical. If it comes out that there's an announcement that the Chinese premier is going to come over here, that will be a sign that a real deal is going to be done. If not, if that announcement isn't made, then I think what we're going to see is a simple continuation of what we've been seeing since December, and that is the sides meeting, talking that they want to make a deal, but nothing concrete ever happening. And this could go on and on and on. And I think there's a good chance that's what's going to happen for two reasons. One, Trump does not want to escalate the situation. He doesn't really want to increase the tariffs, because when he did that last time, the Chinese escalated and the soybean market collapsed. Farmers in the United States got hurt, and these people are in voting districts he's in. He doesn't want to do that before the election. At the same time, I think the Chinese, if they can't make a deal, are happy to just have us be in the state we're in while they look for other trading partners to take the place of the United States, make other adjustments to what's happened. And during the 1960s and 70s, during the Vietnam War, the North Vietnamese did this negotiating game with the Americans for years on end, of talking and nothing ever coming out of it and just going on and on and on. So that appears to be what the Chinese are doing, and we'll see, next week, if at the end of that meeting nothing concrete happens. I think we can expect nothing to ever happen, and probably this will remain the situation until after the election. Maybe the Chinese think they can wait out Trump and hope someone else gets in office that they can deal with better, and maybe Trump thinks that he can't escalate these tariffs, so he's frozen until after the election too. So I think that's the most likely scenario. But we'll see. If a deal's made, then I would expect, that'll bring a temporary rally to the global markets, but I don't think it's going to create a massive, endless surge. But it's like last month, we had the Federal Reserve say that they're not going to raise interest rates anymore, that they can't do it, and that they're going to stop their quantitative tightening program, and the stock market rallied big time the next day and then gave up all the gains the day after. So I think we're kind of in a sluggish market where good news isn't going to really do much but rally the market for a day or two, and that's about it. However, bad news isn't going to tip things over completely either, because we're in this kind of sluggish type of action. But by the next time we talk, I think we'll have some resolution on what's really going to happen with this trade war.
We'll have more with Mike Swanson right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, are there concerns that NAFTA 2 is not a slam dunk? House Speaker Nancy Pelosi says she wants to see Mexican labor law reform before the Democrats vote yes. Canada's Foreign Affairs Minister says we're not eager to sign unless the U.S. removes steel and aluminum tariffs on Canada. Is NAFTA 2 dead in the water until these things are resolved?
Well, this is a big, I don't know the answer to your question, but the question brings up a big issue, and that is, or it shows us something. And that is that the trade war with the United States and China, that's what's dominating the headlines in the media. However, there's all these other trade issues that may be just as important. So, it's funny, like your NAFTA question, I don't know the answer. I really don't even know many details about it. However, I was talking to some farmers where I live, and we have farmers where I live. They grow tobacco and soybeans, and they were telling me that they're worried about Europe. That the worry is that the Europeans, if Trump slaps more auto tariffs, that they're going to retaliate on agriculture just like the Chinese did. So I bring that up to suggest that you live in Canada, you're more on top of what's going on in NAFTA, and I'm talking with people who aren't even aware of that or are scared of what could happen if Europe. So the trade situation is still one, I would say, of non-resolution and a lot of moving parts and pretty chaotic, and it's very difficult for people who are suffering under these tariffs, no matter what industry they're in. And I just shake my head at the Pelosi statement because we're worried about what's Trump do, what, and as you mentioned, what are the Canadians going to do? And then she is another factor to the whole story.
Well, also too, when you say asking another country to change their laws, that's a long stretch from a trade agreement, isn't it?
Yeah, it seems very unlikely to happen. And, that's what's going on with China. We're telling them, the premier, to capitulate and change their entire, almost economic system to a certain extent. And then, even if the Mexican president or the Chinese premier actually want to do these things, there's no, that doesn't mean they can do them. Yeah, I mean, they have to have the political backing of their own countries to be able to make these changes that the Americans are demanding. And, that's a lot to hope for and a lot to expect.
With the slowdown in Europe, this situation with Brexit where the MPs in the UK were given 8 different options and they turned them all down. It sounds like, I'll give you $1 million and a ton of gold, and that's not good enough. Yeah,
it's just one thing after the other. However, with all these chaotic headlines, right now we're in a moment where the stock market doesn't care, no matter what the headlines seem to be. And yes, you could say it was like that in 2017 and 2018, but it was also like that in the summer of 2008. And I'm not saying we're heading for a crash like that, but the point is that in the end, it's really the price action that matters to people. And we're in this rally, as you mentioned at the start, a record for the first quarter, of course, is following that 20% decline. And as long as the market appears to be in an uptrend to people, they feel like they can't miss out on any potential more gains. So as long as the S&P is above support, 2750 at the moment, that's where the 50-day, 150, and 200-day moving averages are about. People are going to keep trying to buy the dips no matter what the news is until that strategy comes to a failure. Mike, so in a market like this, is there any one particular area you think people should focus on really sharply again? Yeah, and that is gold, because for 2 reasons. First of all, I think it's gold in the mining stocks. They've been outperforming the market since October till today, and I just think they're going to continue to do that. However, I think it's also critical from a long-term diversification standpoint to have a portion of your money, whether it's 10%, 15%, or 20%, in gold-related assets. Because in the long run, in the next couple of years, I think we're going to see a time in which we're going to see the bond market and the stock market and the American dollar all go down at the same time, and gold will go up as a safe haven. So I think it's going to be an investment at some point in the future of one of necessity, and it's simply too hard to time this gold market perfectly. It's volatile, and people are always looking for this perfect entry point, trying to make a huge amount of money, when all they need to do is put a small amount of their money into it, and it can do well for them over the next couple of years. Mike, thank you so much for speaking with us. Oh, great to talk with you. My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.